What's going on, guys? Welcome back to DB Trader. In today's video, I'm going to be talking to you about the importance of market structure and how it's so important to understand where you are when it comes to market structure, because market structure is the base on how the market moves, right? You have to understand where you are in market structure. Are you in a lower high, lower low, higher low, all that stuff? Because if you know where you are, then you're not lost. Then you know what the market's trying to do next. If it was an uptrend and the market just did a higher low, what's next? Higher high. So then you base your bias on that. So I'm gonna jump in on the charts. Let's jump into the charts, and I'm gonna show you how the market moves. Like you honestly don't need anything else but market structure. If you understand market structure, you can easily make money in this market. So let's just jump into the charts. Now, as you can see here, I've got AUD USD, clean charts, nothing on it, no indicators, nothing. Now, do not look at the 5-minute market structure, right? Because look how sloppy this looks. It's too messy. You don't know if it's going up, going down. You just don't want to look at the 5. I always like to start either on the daily. See how clean the daily is, right? If you look closely, look, low, high, higher low, higher high, and now it's creating a higher low. Let me just make this black so you guys can see it. You see market structure, higher highs and higher lows in an uptrend, and lower highs and lower lows in a downtrend. Now, when I look at the daily, when I start, when I jump on the charts and want to, let's say, start trading, right? First thing I look at is where we're at, even the weekly sometimes, okay? I can see that on the weekly, we have a low, a high. This is just that. We have a low, a high, higher low, higher high, and now we are retesting this low, right? It has not broken the level yet, so the level is not broken yet. For it to be completely broken, the market has to close beneath, and now this week's candle must also close bearish beneath this low. Now that confirms that this low is broken. So right now it's not broken. We have 3 days left in this week's candle, and that's when we check. So I can see on the weekly, lots of bearish momentum. We go down to the daily, we see a lot more structure, a little bit more in details. And this is where I do most of my analysis and base my structure bias on, right? We have a low, just keep clicking on the arrow, low, high, higher low, higher high, potentially a higher low for a higher high. See how easy this looks? It may look easy, and it sounds easy. Oh yeah, just sell on top there, right? I'll just sell up here and then buy down here, right? Simple, right? It's not as easy as it looks. It's really not. So now obviously you need to have what would really help is have your obviously support and resistance. Let's say this is a support here. We have structure here, right? Let me just make this thinner. Boom. We have there, and we have up here, right? You see how we're playing through the zones right now. Now, I like to go down to the 4 hour. And the 4 hour is where I honestly look for a setup, right? 4 hour is where I look for a setup. In this case, we see we are very close to our higher low from the daily market structure. So if this triangle that I drew here never gets broken, then this will be a higher low. If the market starts forming, market structure to the upside, then that's when we look for buys down here, right? So now it's a waiting game. Forex is honestly a patient game. You need to be patient, right? A lot of people get lost in these small time frames. Oh, it's going up, I'm gonna buy. Then it goes down. Oh, it's going down, I'm gonna sell, and it goes up. Don't even look at the smaller time frames, right? I do when I'm looking for entries, just to critique my just to kind of finesse the market to smallest details. But my bias and my setup is based on the 4 hours. So I know that we are now forming a potential higher low. So now I just wait. I wait and see what the market does. If the market gives me signs that so when I say signs, this is what I'm looking for. I need to see a break of this lower high right here, right? So what I need the market to push up, come back, retest for a continuation to the upside. This is what I'm looking for. And that's where I'm going to be looking for a buy position. Now, this is the 4 hour time frame. So can you just imagine how long it would take for this setup to play out? This is what I said. Forex is a patient game. You got to be patient with it. But yeah, so let's say, we want to look for a buy here, and you can always look for a divergence. You see lower lows, it's going up in the RSI, but that's just for another video. If you guys want to see that, please leave a like down below. Comment, let me know if you want to see that video. What indicators I use, how I use them to help me find entries, and so on. So you can see how the market moves in structure, right? We've got structure here. We've got structure here. Right? You can see how the market always goes back and tests. Right? Let me bar replay this and show you guys something real quick. Now let's say that's where we are, right? And that's you jump on the charts and that's what you see. Do not do anything but to wait. You just wait and wait and wait. Now let the market play out. It comes down, it breaks the low, comes back, comes down. Now you just wait, you wait until the market finds some sort of support to draw your Fibonacci. I've made a video about the Fibonacci, so you can go and check that out. Now you can see how we had a bullish engulfing there. Now that tells me that the market is ready to retrace right now. Now here's what I do. I grab my fib from point A, which is the lower high on a downtrend, from that previous high to where the market found support, right? Which is right here. Now I know that we have structure here. We have a low, and the market usually, when it breaks a low, it goes back to retest, and that's when you take a sell. Patient game, you wait. Now we play the market, see what it does. Goes up, boom, and a bearish variation. This tells me that sellers are in control now. The market have retested previous structure. We had a 61.8 confluence rejection of the Fibonacci. You see how we have multiple confluences telling us that the market is ready to sell. We have bearish engulfing, right? We have 61.8 retracement on the Fibonacci. We have a retest of previous structure. We also have a lower high. This high is lower than this high. In a downtrend, lower lows and lower highs. So now we've formed our lower high, bearish engulfing, 61.8 rejection on the fib, retest of previous market structure. I'm taking a sell. I don't know about you, but I'm jumping all over that shit. Let's say of the close of that candle, you put your position there, stop loss just above, just to give it some breathing room, just above the and then first day profit I always do is negative 26%, and I close 80%, 90% of my position, let the rest run. Now let's say you've entered there. Let me just remove the Fibonacci so it looks much cleaner. And we see what the market does. It wicks a little bit up, but our stop loss are above. This is why you always put your stop loss above the previous market structure, either low or high, depends on what you're buying or selling. Because if the market breaks that, then it broke structure. That means now we can change our bias and look for potential upside movement, not sells. And the market just instantly melts in our favor, negative, and hits our take profit. Boom, right there. This trade was complete in a matter of entry. Oh, actually, no, I did this wrong. From here to here, 4 days. Are you patient enough to wait 4 days for this setup to play out? I mean, I wasn't personally. When I first started trading, I wanted to make as much money as possible, as soon as possible, in and out. No, the forex market is a patient game, and this, mind you, this AUD/USD is a very slow pair, and you have caught 106 pips on AUD/USD. That's golden. You know, AUD/USD, if you catch 20 pips, you lit. Because this pair does not move whatsoever. Like, it's so slow. It took 4 days for the setup to play. So keep that in mind, guys, when you're trading. You know, don't expect the market to just go straight to your TP or take profit, or just let the market do its thing. Let it play out. As you can see, we have a very nice sell setup here. And let's just remove all of this. If I can look at this buy position right here as well. Market, let me just cancel this. Look at that. Market forms a higher low, goes up, forms another higher low, higher high, higher low. Now look at the wicks. Let me show you something crazy. You're gonna love this. If you look closely, this wick retested this wick. Can you see that? So always pay attention to the wicks. Look at that. Market breaks through. So if you have put this like down here, right, where the bodies are, it wouldn't have come down all the way. But if you took your fib from point A to point B, that's a 50% rejection. That's still valid. This is why I put Fibonacci, market structure, wicks. You have to put everything together. Nothing is perfect. The market doesn't do what you think it's going to do. The market would do whatever the hell it wants to do. All we have to do is just, adapt and react to the market, not predict it. So the market starts here. It retests the wicks. It gives us a massive bullish engulfing, right? It gives us this beautiful bullish engulfing. I'm in a buy after that. Boom, take profit, stop loss, 1-to-3 risk reward ratio. Beautiful, beautiful trade. This is the important market structure. Now, mind you, how did I know we're buying there, right? Go back to the daily and look on the daily. We are in an uptrend. You can see how we have a clean uptrend on the daily. This is why I bought here. The market forms higher high. What's next? Higher low. So the market comes back to retrace to form the higher low, and that's when we look for sales. Now, when the market starts to move to the upside, to complete market structure and form a new higher high. Now, let's mind you that doesn't mean that the market can't just keep on going down. It can if it wants to, right? It can if it wants to. This is why I say react to the market, not predict the market. Adapt. See what the market's trying to do. All right, let me do that. Now, in this scenario, I'm going to wait this out and see what happens. If the market rejects and gives me bullish engulfing on the 4 hour and starts making, bullish movement, I'm buying straight away. So I'm gonna wait for this to be broken, because if you look closely, we have a downtrend. Look at that. And we can say buy zone. So as soon as it breaks that, as soon as it breaks this trend line, I'm buying in. Well, not straight in, but like I'm gonna wait for a retest, so on and so on. So I hope you guys enjoyed today's video. I hope you learned something new. If you have any questions and how you can, if you have any questions about how you understand more critique about this market structure video that I'm making for you guys, just let me know, drop it in the comment, and you see how the market moves. I mean, high, low, low, high, low, 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 high, low, 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 high, low, low. It's really simple, but it's not easy, right? It's simple, but it's not easy. So yeah, I hope you guys enjoyed today's video. This is the importance of market structure. You see, I didn't use any indicators. I didn't use nothing. Pure market structure and candlestick analysis. Bearish engulfings, market structure, that's all you need. Anyway, guys, hope you enjoyed today's video, and see you guys in the next video. Peace.